Good afternoon, everyone, and welcome to our webinar, American Rescue Plan Act Update. I'm Janice Kaplan with the Marketing Department at James Moore & Company, and I'll be your host today. First, we'd like to remind you about our new premium webinar series. Because our Excel training has been in high demand, we've decided to offer a two-part deeper dive into some of the software's more complex functions. Now, there will be a small registration fee of $25 for each of these sessions. However, you'll also receive 2 CPE credits for each webinar attended. Our presenters today are James Moore partner James Halloran and manager Ben Clark. James and Ben combined for over 30 years of experience in governmental accounting. Not only are they well-versed in government auditing standards, the Florida Single Audit Act and OMB Uniform Guidance, they've also advised government entities extensively on their use and reporting of ARPA funding. So they'll be bringing some great information to the table today. I think that's it. So I'm going to turn off my camera and hand things over to James and Ben to get the presentation started. Guys, go ahead.
Thanks, Janice.
All righty. Well, good afternoon, everyone. This is James here, and a little bit about what we're going to accomplish today. We're going to do an overview of ARPA, American Rescue Plan Act. So we'll be using that acronym throughout today. You'll hear it a lot. Also, specifically dealing with what is the effect for state and local governments. So the State and Local Physical Recovery Fund overview. And what you all really care about is how can I use this money? You know, you guys all have been allocated a certain amount of the money. So what purposes, what uses, what's some of the general guidelines that are out there already? Of course, with any federal funds, there's going to be some reporting requirements. So we'll go through some of those that are currently out, and then give you some information from the Government Finance Officers Association, GFOA, on guiding principles for spending ARPA funds. Now, originally, we had hoped to have some additional guidance from OMB from their compliance supplement update they provide each year. Typically, that's been provided in May or June. We thought we were going to get it before this time. It's still not quite issued yet, so maybe by July or August it'll be issued. But so we were hoping to have some more, but if not, check back. We'll have some e-blast on that as well, and some stuff on our website as soon as that's available. So I'm going to start us off with the overview of ARPA. So American Rescue Plan Act. How did we get here? If you kind of look back and say, well, what's happened in the past 2 years? You look at, COVID-19, and there are a bunch of different bills that got passed. About 8.3 million was to the coronavirus. Families First Response Act, that was, another chunk of money. About 2 trillion for CARES Act, and about 900 billion, of additional funding as well. So you have this act, the ARPA Act, is about $2 trillion, as well. So a large chunk of money, a very large chunk. And I know that a lot of the local governments didn't receive a lot of money in most of those other things we discussed just above. So this is kind of your guys' opportunity to have some of that money and put it to good use back in your communities. It did create 2 new funds, and they are the Coronavirus State Fiscal Recovery Fund, or CSFRF, or the Local Physical Recovery Fund, CLFRF. So kind of a tongue twister if you say both of those really fast. I don't know, I really can't try it. Without maybe some adult beverages later on, I might be able to get it done. So U.S. Treasury has issued an interim final rule. So that's a typical government term. It's final, but it's not final. It's meaning that they can come back and change it at any point in time, which I'm sure they will. Questions are due, I want to say it's in a couple of days, actually. Maybe it's July 16th, I think this Friday, on the initial interim final rule for people to provide comments, and we'll see if they change anything based off those comments or not. But I'm sure you'll see as we go through the presentation, it's a rather long cycle. Out to 2024 for some things, and potentially for spending all the money out to 2026. So during that time frame, I'm sure there's going to be revisions either into the rule, or definitely probably additional frequently asked questions. They've been updates since those were originally issued in the last month or two.
And I think that happened last year, James, right? The CARES Act, if I remember correctly.
Yep, the big bonus last year for CARES Act, remember in September of last year, a lot of people had the CARES Act money there. and the local governments were having difficulty spending the money purely related to, personal protective equipment and individuals that work directly with COVID-related items. But then they opened it up and said, you can use the money for any public safety salary. And that's what helped a lot of our local governments, because it basically could be used for any frontline police officer, firefighter, or medical personnel, anything like that. And so I'm sure there'll be some changes as the time goes on. My guess is with everything with politics, as it gets closer to election time, you'll start seeing a little movement. So there's about $350 billion allocated to state and local governments this time. So the state portion, about 195 billion, and then you got about 1.25 billion that gets allocated between the states and the District of Columbia, DC area, and then the remaining portion is divided up by formulas. So there's kind of a dividing line. You have basically those cities that are larger cities that meet the criteria for CDBG money based off that formula. So that's one tier of governments, and they get allocated. The formula for that allocation is different than what's considered an NEU, which is a non-entitlement unit, is what they're describing those as. So that basically means you're not a CDBG eligible community, so you fall into the NEU category, and how that money is divided up, that formula is different than those larger governments. And of course, counties also will be receiving this money. It's only the cities and counties. So I do get the question a lot of times, well, what if I'm a special district in the state of Florida? Unfortunately, that's up to the state if they do have any monies that they would want to allocate, but they're guided by the federal regulations that said they have to give it to the cities and counties based off that formula. If they do have any excess, then that could be available to go to special districts. And there are some other programs not related specifically to state and local governments where a special district may be able to gather some of those funds. So it's a lot of money. And just to remember, for all these funds we're going to be talking about here today, it's a lot of one-time money. So think about that. And I know Brent will probably talk about it later. It's one-time funds. So you want to utilize it for things that aren't a recurring expense, is always what we want to recommend to people. But some of those other areas that funding came through on is we had, HUD has some money allocated to it in ARPA. That's for emergency rental assistance and direct homeowners assistance. That's going to expire soon. Where for landlords, so landlords will start the process potentially of, evicting tenants. So I'm sure there's going to be an uptick there in those rental assistance dollars going out. Department of Education, they've had some more money go to the Education Stabilization Fund. DOT got a good bit of money related to those areas you see there. For whether it's for seniors or individuals with disabilities. FEMA, as always, just like the last round, had some funds as well. And then Health and Human Services has about $5 billion for low-income energy assistance programs and some drinking water and wastewater type expenses. One thing on there I want to point out is that go back one slide, Ben, there is the $8 billion for airports. So there's an opportunity for those governments that do operate an airport for tenant assistance payments, similar to kind of like a lot of counties created programs to help small businesses. So there's some money that's available for those airports and to assist those ancillary businesses that work around airports. So that's some of those funds. So your question might be, well, when will I actually get my money? I think my smaller governments are all wanting that now. Well, how do I get my money? And it should be flowing through here pretty soon. I know the state of Florida got a 30-day extension. I do know from the FGFOA listserv, I helped monitor that for the FGFOA Technical Resource Committee. There were a couple governments who indicated they did receive funding. They seem to be some of the larger, more metropolitan cities. So hopefully the state soon here will be distributing out those funds. And you're just going to get a deposit. You're just going to get a deposit into the bank. So what you want to do, we think about those funds when they come in. You can't spend them all. And from an accounting standpoint, you're basically going to we'll go through a journal entry here. You're going to debit cash and you're going to credit a unearned revenue liability. So you don't recognize those funds as revenue, similar to the CARES Act. They're not considered revenue until you meet the eligibility criteria for those funds. So we also put the link there, for how to get your funding. There's some things, if you're at NAU, a process you need to go through to make sure you got all your ducks in a row in order to make sure you're receiving it. So now we come to our first polling question.
And here it is. You should see that polling question in a blue box. How much do you expect your organization to receive from ARPA funding under its various provisions? Less than 500,000, between 500,000 and $1 million, between 1 and 10 million, or more than $10 million. So go ahead and log your vote. Remember, you need to answer all 3 polling questions to get your CPE for the course.
Now, I will throw in here, because I know all of you guys have heard about my dad jokes. So I have a couple dad jokes I'll sprinkle in here. I know Ben's been looking forward to them. I didn't give him a preview, but I will just say, what do all accountants suffer from that normal people don't?
I have no idea, James. What?
It's depreciation.
On that note, we're going to go ahead and close out the poll here, and let's take a look at our results.
That's good to see a lot of between the 1 million and 10 million. I see that a lot with my cities between, say, populations of about 15,000 to about, say, 25 to 35,000 population range. That's kind of what I've seen too. So that's good. That's a good chunk of money for you guys to have, and think about some projects that you've been wanting to do, or that maybe you can speed up the progress of that project. Well, now I'm going to turn it over to Ben, and he's going to start the discussion of some of the eligible uses of those state local physical recovery funds.
Well, good afternoon, everybody. Hope everybody's doing well, and thanks, James, for taking the first intro there and getting us into the meat and potatoes here of how we are going to actually spend these funds. And so I don't have as many dad jokes as James. I am a dad, but I don't have that many dad jokes, so I guess I need to work on that. But other than that, we're just going to go through the uses of these funds. So basically what they did here with the ARPA funds is they gave us 4 what I would call broad categories to use the funds. And so you see them all listed there, and I'm going to go through the first 2 uses, which are the responding to public health emergency and its negative economic impacts, what that category means, and then the premium pay for employees and those who were provided essential work during the pandemic, and how those funds are used to pay out. James is going to take us through revenue loss, and then the water, sewer, and broadband infrastructure. So if you see those 4 categories, those are kind of the broad overarching categories of how we're able to use these funds. And then the only other thing I like to point out too is these are, for the most part, prospective in nature. So in other words, they gave us a date of March 3rd, 2021, and they want you to use the funds on expenses from that date forward. Now, the only caveat to that is premium pay. They made an exception for that for the most part, and that's able to be what you would call backdated is what I would call it. And then, of course, revenue loss is a little bit different of an animal, and James will kind of explain how that works as far as that calculation and how using those funds goes. But if you're using them for the other categories, it's basically perspective kind of going forward. So you couldn't say, hey, I got broadband and infrastructure and other things, in 2019 or 2020 or whatever the date is, and try to apply that, those funds for that. It has to be really that March 3rd date kind of onward. So use number 1. So in the interim final rule, they kind of use the over title responding to the public health emergency and its negative economic impacts, and then they kind of go into a whole list of really what that looks like. And I kind of bullet pointed some of these out for you here, and just as an example, some allowable costs under this fund. So just keep in mind, you're trying to use the funds and set up a program that uses the funds. And so what I've seen a lot of kind of states and local governments do, I know they're doing it in Tallahassee, I think where James is in Volusia, they're probably doing something similar, but they're kind of all you're starting to see your states and local governments in the local areas get together and start developing programs to use these funds. So I know in Tallahassee, for instance, there is some discussion about using them for some like rental kind of assistance and things like that, which is one of the bullet points in this slide. And so some of the areas that you might see the funds under this category could be COVID testing or contact tracing, funds for public health staff. If you needed to rehire employees back to a pre-COVID level, that's another one. Another one that was interesting to me was a good example is the city of Winter Park, actually. If you go on their website, you can see they're developing a program to basically pay out grants to nonprofits under this category for those who are affected. Unemployment insurance funds is another one. And then, like I said, mortgage and rent assistance, survivors benefits for COVID. And then another one is an interesting one is providing aid to disproportionately affected populations. They call them qualified census tracts, but maybe basically making people able for health and wealth and social services, housing insecurity, all these types of things. So this is a pretty broad category, but like with all the categories, I think it's important to kind of keep in mind that you're developing and kind of targeting out your ARPA funds and making sure you're kind of using them within one of these four or multiple of the four categories. That way it's an allowable cost of the program and you're not using the funds outside the bounds of the program, if that makes any sense. So use number 2. So this is another, you know, not confusing category, but it's an interesting category as far as how you're going to use these funds. So this one they set up is premium pay for essential workers. So the whole idea with this category is basically the legislators felt that there were certain essential workers who didn't get any premium pay or bonus pay or whatever you want to call it, or hazard pay for their work during the pandemic. So if you were a frontline worker, you were negatively affected. And a lot of times these types of workers, and you can see some examples of them there, these are the type of workers who didn't get really any excess hazard pay. And I know myself, we were able to work at home a lot and we weren't really necessarily on the front lines, but if you were in the child and social services, public health, etc., a lot of times, yeah, you didn't really get a break, in other words. And so what they're kind of doing is allowing you to pay some premium pay for the services done during this time. And how that works is on the next slide.
Yeah, Ben, if you kind of think about that, you know, one of those categories is, you know, think about, you could still go to Publix and you could still go to Walmart and those people were still working. Now, I haven't heard of many governments setting up programs yet for that, but it is interesting that it's allowing the payments not to just stay within your government. You can actually disperse them out to privately held businesses. So that's kind of different than the CARES Act from last year.
Right, and I think the city of Winter Park also has one too that, if I remember correctly, has one like that. But yes, you can pay out a grant to maybe a different nonprofit who did have frontline workers, is what you're talking about, and it kind of falls within the same bounds of if you paid it directly to your employees of your local government. So it's a different flavor of the same type of program, in other words. So they did set some boundaries with the premium pay and how that works. So it has to be basically capped at a subsidy of $13 an hour, and there's a maximum cap of $25,000 per employee. And so you can't obviously pay, you know, all the ARPA funds to one employee. They did try to set some limits, but they did say that the subsidy was $13 an hour up to $25,000. Another interesting point is that the first bullet point, you has to be designated as a use. In other words, premium pay has to be designated as a use by the lead executive of the entity. And so I think the lead executive is an interesting term. I think for the most part, I think a lot of times that'd be like somebody on commission or somebody higher up like that, as far as a decision maker of your state or local government for using those funds. And a lot of times what I've seen so far is, you know, in a lot of places, the council or the commission or the decision-making body is kind of setting up programs, in other words. So a lot of times that's going to be the kind of default way that works anyway. The entities must prioritize low-income eligible workers. So they wanted the entities, in other words, the governments, to basically target the people who are lower income for these funds. So if you're going to do premium pay, it has to be targeted at those lower income levels. And then also, if the entities pay over 150% of the state's average annual wage for all these occupations, they have to they have to document that in writing. So in other words, if your premium pay rises more than 150% over that state's average annual wage, you need to document that and have a written reason. And so that's something to keep on file if that were the case. And then here, another bullet point is pointing out that yes, you can pay this directly to your employees, or you can pay this out as grants. And there's an example there of a restaurant or child care center or anything of that nature. So I'd say uses 1 and 2, the negative economic impact of COVID and the premium pay are 2 uses. The one that is the most hot topic, I'm going to give back to James right now, and he's going to take us through revenue loss, which we're getting a lot of questions about, not only from our clients, but from others. And then the other popular use, I'd say probably the second most popular, or maybe it'd be the most popular, is water, sewer, and broadband infrastructure. And so he's going to take you through categories 3 and 4, and I'll give it back to him.
All righty, Ben, thank you. So revenue loss, when it came out, probably you heard a lot of the media and a lot of politicians saying how they were going to use their money, and probably half of what you heard in the news media is not correct. So hopefully we can correct some of those misconceptions. It is nice money to have. You have a good bit of uses for it that are long-term in nature, which is nice. But you'll see as we kind of run through this calculation, it is not an easy calculation. And for a lot of people, just think about, how much, when you kind of hear what the calculation is, how much is really that lost revenue going to be for you? How much of your, say, if you got $5 million, is the potential for this category? And thinking about the complexity of the calculation and making sure it's accurate, this is probably the area I've seen the most comments written back to the federal government on how to explain this. Even in their frequently asked questions already, there's a significant amount of questions on it. So it is going to be difficult for people to do that and then come up with a calculation. And then there's restrictions on the use, as always. So we're going to talk about a lot of that. So a little bit about the calculation here. It's going to be a little tough to come up with that, loss of revenue, and what's included in that amount for revenue definition. And can you go one slide, Ben?
Yep.
And then, so you'll see here, it's a government entity-wide calculation. So it's thinking about your entire government operation, and then you back items off of that total revenue. So one is federal transfers, or thinking about federal grants. So any of your federal grants you received, anything like that is automatically excluded, which can help. If you think about if you got CARES Act money, that's going to help in the calculation. But also if you had other grants in other years, that's going to be backed off as well. That can, range from large construction grants for somebody, or it could be just programs with your public safety. You may continually get a COPS grant or something like that. So all those need to be backed off. Intergovernmental transfers are also excluded, except you can include ones from state and local governments. So the monies you guys get from the state is everyone gets their state revenue sharing, state shared sales tax, those type of things. Those are includable. One item that's excluded that a lot of my cities have is utilities. So water and sewer, gas, electric, all those. If you have those type of operations, those are excluded from the calculation. Refunds, corrections, errors, proceeds from debt, which makes sense. That's kind of a one-time thing that, you get the debt, and if on your modified accrual basis financials, your governmental funds, you see that debt come in, you don't include that. And I guess they didn't like liquor stores, so they included liquor stores. Not every state has state-run liquor stores. That's something kind of more in the Northeast, kind of eastern central states. We don't have them in Florida here, but you exclude those as well. And kind of when I think about this calculation, I think about, say, property taxes being one of your major sources of revenue for a local government. And I think about it and I said, well, some people were keeping that rate. Maybe they were going to rollback rate, but even with rollback rate, total property tax revenue increased because of new construction. So that's something to think about, before you even kind of delve into this. And yeah, there was some reduction in the state shared revenues and the sales tax, the half-cent tax, maybe communication service tax. But how many months was it? How much is that compared to already looking at how much you might have increased your revenue for your property taxes? Just the gross amount. Don't think about rollback and all that, that whole calculation that we go through. Start thinking about that and say, okay, how much do I really going to get out of this calculation? One question that was that's already in the frequently asked question guide, and we'll give a link to that later on in the presentation, was about, well, how do I calculate this? What basis of accounting? It was a question that came up, and their answer is, you can provide the data on any basis you like, cash, accrual, modifier accrual, as long as you're consistent. So it's very interesting thinking about it from an auditor perspective. That makes it a little tricky as well. I know for a lot of my local governments, it makes it tricky, depending on, typically you're only truing up your books once a year at the end of the year. So on the next slide, we'll go through a little bit more of the detail of that calculation, and we'll see, what other financial data do I need to do this calculation? So you're going to need your annual revenues as of December 31st, and that's based off the categories that we talked about before, and some of those categories. And then you'll look at it for the annual revenues for the most recent fiscal year as well. So that's one of the complexities you have already going on in the calculation, is some things are based off of, have to be based right now off of December. So for local governments here, everyone's a September year end. So you got that 3-month difference. And yeah, you're doing a good cutoff for your September 30th financial statements, and you feel real good about those numbers. But if you got to go through and convert December 31st for 4 years, you'll see it's a great accounting exercise, maybe to give somebody, a challenge. Maybe they should put it on the CPA exam. I'm not sure. This would be a good CPA exam question. If someone could do this and calculate it correctly, then they probably should pass the exam. So that's one of the little tweaky parts about it. And then looking at the revenue calculation, you take those annual revenues that are, from above, and you calculate what the percent growth is from year to year. So you're calculating that percentage. You compare that percentage to the set of a percentage inside the interim final rule of 4.1% is the default. And you use the greater of those two percentages to figure out, this is my growth adjustment percentage. So I know this is already complicated. I tried to flow chart this and I got confused. I got a spaghetti model rather than a flow chart. So then you look at it and you say, okay, what else do I need to do? Okay, well, you take your base year and you determine what they call I can't even come up with these terms. They're counterfactual revenue is what the terminology is, and that is your base year times think about your base year times that growth percentage. So if you're using the 4.1%, it's the 1 plus 4.1% will get you your growth rate, N being the number of months. And we have this little chart here, which depending on what size computer screen you're looking at, is trying to help you with that. And this is based off of this is out of I think it's out of the rule. I can't remember if it's out of the rule. Questions that kind of give you based off a junior end type of situation. So if you had someone with a junior end, you still got to calculate December 20, December 21, December 22, December 23, and then that gray portion is the extent of potential reduction in revenue is what it's calculating. Another question that I saw in the frequently asked question guide was, what is the time period for estimating those losses? And you can see from this, it's you start with December 31st, 2020, which of course, was, not too long ago, I guess right now, about 1.5 years ago, but, right before really, COVID hit us in that March, when you think about that time frame, and then go to this December 31, and then 22, and then 23. So it's not an easy calculation. It won't be a fun calculation. There is some assistance out there. I will tell you that we go to the next slide here, Ben, we'll talk about a little bit more. So, and this is out of the interim final rule. That's what IFR stands for, page 59. And you can kind of see this calculation where you go through the months, what your counterfactual revenue is, to finally figure out, okay, how much do I in fact have of lost revenue? Now, the good thing is if you are a GFOA member, we're, as a CPA firm, we're considered an associate member, so I don't have access to this. But they do have a calculator that you can get through the GFOA to help through this calculation process. When I was talking to Ben about this earlier, I had mentioned this is kind of like if you're trying to do your personal tax return in paper form, as opposed to using a software program to calculate it. So that's some of the gyrations, and why worry about having one little formula thing incorrect if you can use a tool to help you calculate it. Of course, it's just like real life. I always tell people in school, the great thing is they give you all the facts in that question in your financial accounting 2 class. In real life, what happens is the harder part is figuring out the facts, and that's going to be the hard part of this calculation. The calculation itself, yeah, it's complicated, but there's tools out there to help you through it. The harder part is what actually is the revenue, what gets excluded from the calculation, what gets included in the calculation. But like I said, luckily GFOA has developed a tool. There's probably some other organizations out there as well. I'd probably stick with the GFOAs, the Government Finance Officers Association. You guys are familiar with them, you know who they are. And that would be my suggestion if you want to kind of go through and play with the calculation. So let's see. Stace, we have some questions you said here, Janice. Maybe should I hit some of those?
We had one, actually, how about paying a bonus to police officers?
So I think that's
That was from a few slides ago.
Go ahead, Ben.
I think that's, I guess if I'm understanding that question right, I think, is that going back to the premium pay? Is that what they're asking for on that one?
I believe so, yes.
Yeah, in effect, that's going to be a bonus. Just like, today, and I read a news article over lunch about, Governor DeSantis, the initial $1,000 per teacher was rejected by the federal government. Now they've figured out potentially a different way to offer that. So, of course, everyone's wanting their little piece of the pie, and that's, part of city and, part of, city, management and the elected officials decide, what's the best use of those funds. Is the best use to provide premium pay to some individuals, and that could be a portion of it or none of it, or is the best use infrastructure, or is the best use, use some through this revenue loss calculations where you can see some of the items that it can be used for. So once you get through the calculation of how much your lost revenue is, then you go, well, what can I use it for? So I call this revenue loss fund facts, right? So funds cannot be used for additional contributions into your pension. So your normal required contribution that's set in your actuary report, per state statute, of course, you must contribute what the actuary required determined contribution is. But if you were going to put additional money to help fund a pension and get that liability down, that is not allowed. You can't use it for a tax reduction. So if you were thinking, hey, I'll be able to recognize, say, $1 million, and then I'll be able to lower my millage by whatever point that is not allowed. You can't use it for debt service. So that excludes, a big portion as well. And you can't use it for rainy day and stabilization funds. And this is something you heard a lot about when the act was being passed, that people are like, oh, this is great. We can replenish our rainy day and stabilization funds or increase them even. Not allowed. It's straight in the interim final rule. But they can be used for, any government services, they're, directly providing aid to citizens, pay-as-you-go capital projects, being maintenance, those type of things. You can use it on cybersecurity, health, K through 12 education, police, fire, public safety. So a lot of other uses. If you get through the calculation and you have lost revenue, there's a lot of other uses for these funds, that you can use over that time frame. And that in that time frame, remember, is, it's that March 2021 date through 2024, is the time period, is the initial time period that you can spend these funds in. All right, so one other thing just to think about is, what do you need to demonstrate? I always think about this from an audit perspective. Am I going to have to demonstrate anything for this reduction in my revenue? How do I got to do that? So with the interim final rule says, it is a calculation, that formula, and it's presumptive that an administrative ease and recognition that it's automatically considered eligible. So it does give you a little bit of flexibility, like I mentioned, on what you use the money for. So you're not having to directly relate it back to the public emergency for these funds. So next, and I think, in my opinion, most governments I've talked to as we've finished up their audits in the past 6 months, 7 months or so, and kind of started talking to them about when they saw the initial numbers, for some of my, even a relatively small town of maybe 25,000 in population, they might have seen, hey, I might get $5 million, right, or something like that. So they started talking about, and a lot of them wanted to know, what about water and sewer? A lot of them were interested in that. There is some always discussion about water and sewer being an enterprise fund, and the people who pay into the enterprise fund as opposed to a general government service thing, because of course it's different populations and different percentages who would be attaining those benefits. So that's one of the areas I think a lot of people were interested in. And as we go through here, you'll kind of see some other sources that I think were very nice to be added in. So the broad range, of course, is water, sewer, and broadband infrastructure of the uses that it could be, that's eligible. In related to water and sewer, what they did is they said, okay, rather than actually recreating some new guidance, they said, let's use something that's already out there. Kind of revolutionary, for a federal program to not, try to recreate something from scratch. They said, we already have this clean water and drinking water state revolving loan fund programs. A lot of you I know already get that funding through the state, very attractive rates. There are also grants that go along with those fundings as well sometimes. Some of it's, forgiven up front, some of it's forgiven over time even. So this gives you some guidelines to basically the uses that are in the clean water and drinking water state revolving loan funds. All those are eligible for this infrastructure use. So that right away gave people some clarity, saying, okay, that gives me some defined areas that we can go into. Broadband was another area of use. I haven't heard as much discussion on broadband from my governmental entities, but there are some uses for broadband to be able to improve that infrastructure in your community going forward. So for clean water and drinking water uses, so this is straight out of the clean water and drinking water fund guides, and you can see there are a lot of different uses that people use every day. Treatment, distribution, the storage, new system development for drinking water, all that stuff. Under clean water, if you look on that second line, the one that's going to stick out the most, at least to most of my clients, said, oh, stormwater. So stormwater is an issue that a lot of local governments have issues with, and you may have a stormwater fund already set up. It could be a charge on your monthly water bill. It could be an assessment on the property tax bill. But most people, if you have significant infrastructure, city streets, those type of things, you also have significant stormwater issues. So a lot of people are really happy to see that there are some uses outside of just water and sewer that were available. You throw in the stormwater component, and I think it brings into the fold a lot of governments that didn't have a use. Because I have some small towns that don't have their own water and sewer operations. It may be done by a regional authority, or it may be done by the county. So the stormwater, I think, is going to help some of those smaller communities potentially, where there be some uses for them, for projects going forward. One thing to think about too is you cannot use these funds you can't use the ARPA funds as a match for another clean water or drinking water program. So if you have a grant from them already, you can't use the ARPA fund as a match on that grant. This is the next thing is a question, just straight out of frequent question ask guide. And it says, what about, construction water sewer projects that go past December 31st, 2024? So that's the cutoff date. You have that March 2021 through December 31st, 2024. So they've always which is nice, they've already addressed it and said, well, what do we mean for that? What does that mean that's written in the interim final rule? And it isn't what I thought at all, which is a good thing, because I would have thought, okay, the expense needs to be incurred by 2024. Well, no, what the Treasury is saying is, nope, the costs are good as long as you have them obligated. So obligated, in other words, is it budgeted? Have you budgeted that project by 2024? Now there is a caveat, you do got to complete the period of performance, from a testing standpoint, basically you got to have the whole project or the performance, not the whole project, but whatever portion is going to be eligible would be for expenditures you incur through December 31st, 2026. So that was a nice little thing that they threw in there for everybody. So another question I've gotten is, well, what parts of my project are eligible, to be used for ARPA funds? Is it just the construction cost? What portion of it is or is not? Well, you go back to the drinking water and the clean water guides, and in those they list, pre-project development costs. So that's your engineering costs, those type of things. Planning, engineering are all eligible for reimbursement under ARPA funds. Just to, I'll keep throwing out the date, but that March 3rd, 2021 date is kind of the start of where you can kind of go through. So as you're thinking back now, it's July now, so you got a couple months back there, 4 months back, thinking about what expenses you might have incurred, in March and April, and kind of you can use those to meet this ARPA funds as well. So we're up to our next polling question, and you might get lucky. I might have another joke too.
That we are. All right. So what is the main eligible use category for which your state or local government is looking at using ARPA funds? Public health emergency response, premium pay for essential workers, revenue loss for replacement, or water, sewer, and broadband infrastructure? Go ahead and get those votes in. We'll keep this open for another seconds. I'm sorry?
James, I'm excited to hear it. What do you got for us?
Well, I'll wait until after the poll, and then I'll do it.
Oh, so we have anticipation.
Vote.
There you go. See?
Get your votes in so James can tell his joke.
Yeah, because my kid, my family's kind of tired of hearing my jokes, so
All right, give a couple more seconds. We'll close out the poll.
Wait, before you put it up, my guess is water, sewer, and broadband infrastructure. We'll see what happens. That'll be the highest.
What's your guess? All right, here we go. Let's see what the results are.
Oh, I'm wrong.
I'm wrong.
Placement.
Well, everybody's going for the shiny fruit.
There we go. There we go. Well, with that, there'll be, there is an opportunity there. Hopefully, it's the calculation will work out well for everybody. That'll be interesting. So my joke for this week, it's July 4th recently, just a week ago or so. So I got a kind of a patriotic joke here. So what was the most popular dance in 1776?
I don't know, James. You tell me.
Independence.
If you could hear the audience, they'd all be laughing right now.
I'm sure they are. I'm sure I'll get a couple comments on my eval, right? All right. Well, now I'm going to turn it back over to Ben, and he's gonna chat about reporting requirements for the ARPA funds.
All right. So we've taken you through the 4 broad categories of how we're going to use the funds, and now you've used all your funds, or you're starting to use your funds, and now it's time to report what you're doing. And so what they've given us here are a list of, and what we kind of charted out for you, a list of what reports you can expect to have to file with these. And so this may be a good slide to keep kind of in your back pocket as far as just keeping an eye on what reports you do expect. There is an interim report. There's a due date for that on there. And then it also shows you who's going to submit that one as far as that goes. But the kind of thing with that one is there's a little caveat at the bottom. It says states and territories are going to provide info on distribution NEUs. So just look out for that information as far as what that interim report will look like. But that was one you can expect. The next one is the quarterly report. And then you're going to have to do a quarterly report. And it's kind of only going to cover one calendar quarter each time after that. So you're going to do that, and that's going to be due October 31st, and you're going to kind of keep going from there as far as that goes. I would just say keep an eye on the performance report at the bottom. That could be one that you're going to have to put together. It might have to have different information than your financial information. So just keep an eye on that. And that's going to be counties with populations over 250,000, states, territories, and metro cities. So a little bit different, probably not as much NEUs for that one.
Yeah, probably the other thing is, remembering this October 31st, it's not only just, my birthday, but also, that's when the first quarterly report is due. So I don't want people to forget about that, because you may not be at the point, if you're doing an infrastructure project, where you may not have a lot of expenditures, but you still need to file that report.
So it is your birthday.
Every year, it happens.
All right, so maybe what we can do is send a copy of your quarterly report to James as a birthday present. He'll gladly review that for you.
There you go.
All right, so here is some more reporting requirements that we have down for the ARPA funds. And so what we have down here as well is it is subject to single audit guidelines. That's should not be a big surprise to you. One thing to note is kind of interesting. It was initially issued under one CFDA number, which I think now they're calling assistance listing number. Is that right, James? We have changed the name to assistance listing number instead of CFDA.
They have changed the name to protect the innocent, Ben.
So in case you would love a new name change, we're no longer using CFDA. So if you just need a fact in your back pocket, you can use that one. But also what you'll see down there too is all the applicable program requirements and what you can expect as far as that goes for testing. And they are going to give it a new assistance listing number, but they first issued it under the CARES Act 21027, but it's going to be, they issued under 21019, but it's going to be the CFDA or assistance listing number is going to be 21027. So just keep an eye on that. That's these are kind of what you can expect to be the applicable program compliance requirements and some kind of testing that you can expect. But as far as that goes, it should be hopefully in the new compliance supplement once they issue it, I would expect. And if not, then I guess they would have to update it kind of like they did last time. But eventually this will be all bolted out, hopefully in the compliance supplement. Next, what we have for you are a few what we call GFOA guiding principles and considerations. And so what GFOA did here is they put together some guidelines and some suggestions rather for what they think you should use the funds on or how they think you should consider using the funds. And so there are a good few recommendations that you consider as your state or local government is coming up with programs and uses for these funds. And so we kind of alluded to this before, but when you have the four broad categories and you're thinking about how to use them, I mean, already in the poll, we see that there's a pretty well diverse area of how these funds are going to be used. What's good to keep in mind is that these are one-time funds. And so if you use these funds to maybe put them into areas that are already normally budgeted, then what you're going to be doing is you're going to be covering areas that are normally, already covered by other funds. You want to use them on one-time expenditures. That's kind of why James alluded to. A good idea would be to use them on big projects like infrastructure projects or things that you may not normally have funds to cover. And so if you do that, your future budgetary position is going to be more positive than if you're using them on areas where maybe you're just trying to cover up a deficit or some area where maybe you actually do just need to cut expenses in one area. So what we have there is kind of just pointing out that it may be good to use these funds on a longer term asset like infrastructure, since that's going to provide benefits for a long time to come. You have any other thoughts on that, James?
No, I mean, that's what I'm recommending to my clients, is to, think about this as one-time money. And typically when you get one-time money, you want to use it on one-time expenditures.
Right. Another thing to consider is, what is your state doing, the ARPA funds? So the idea there is maybe not duplicating efforts. So looking at what your state's doing or what other areas are doing around you, kind of coordinating, in other words, could be a good idea with those ARPA funds. And that's kind of what the second bullet point alludes to. So as far as coordinating, you have a city and a county in the same area. I know Tallahassee has Leon County. Is it a good idea maybe to work together with the city and the county, kind of coordinating a cooperative spending plan that will help the local kind of geographical community in that area? I know that's something that we're seeing over here, and I think other areas are seeing that as well. Should I use ARPA funds first or other grants programs? GFOA recommendation is always to use other funds first before using the ARPA funds. And the reason there is you want to target the ARPA funds for uses that are not allowed for other federal or state plan assistance. So the idea there is to try to use the funds kind of in a better order so that you can optimize the use of the ARPA funds. Another couple of questions that they have listed out here are, what should my entity spend the ARPA funds on? Or when should my entity spend the ARPA funds? So their recommendation is to spread out the expenditures over the period. And the idea there is you want to enhance the budgetary and financial stability of your organization. And so if you're using them all at one time, you're not spreading that out. And so you may not have as much financial stability in the future. So they're recommending them to be spread out over the coming years. And then the last question we have on here is, what should my entity do before committing to using these ARPA resources? And so what we would recommend, and what the GFOA would recommend, is to consider all the alternatives and figure out the most prudent use of the ARPA funding prior to committing any of the resources. That way you can best ensure the temporary nature of the funding. So therefore, what their idea there is figure out all the options that are on the table and then use it for the best use of the temporary nature of the funding. The next slide, what we have for you, and it might be another good slide to kind of look at in your PDF, is a list of resources. And so what we put together here are a few of them are U.S. Treasury websites. The interim final rule is there. The guiding principles we previously discussed are there, and a few other links. But these are going to be ones that you might want to have in your back pocket as far as places to go when you have questions on some of the items for these funds. Without further ado, I'm going to pass it back to Janice. She's going to do polling question number 3, the last polling question. And then I think we're going to make some time for a Q&A. I think we have a few questions that were already asked that we're going to go back to and try to answer. And that should wrap our presentation after that. So if you have any other Q&A, maybe get it in now or soon, and we'll try to answer those after this polling question.
That's right. And in the meantime, let's go ahead and launch that final polling question. What is your level of interest in a similar CPE series in future years? Very high, moderate, minimal, or other? James, do you have predictions?
Well, based on the popularity of my dad jokes, I'm thinking it's going to be very high.
We should have had an option only if James keeps telling jokes.
Don't let James down, everyone. We need the answer to be A, very high.
Yeah, my kids will appreciate it, because when I get them out here, they don't have to hear them.
Okay, about 5 more seconds. Got almost everybody in there. All right, I'm going to close out the question, and let's see how close James was. And he was pretty darn close.
There we go. You see?
Yeah.
Perfect.
It's
You
been
made the impression.
All right, so I see we got a couple questions here. So there was one about, can you reduce your millage rate if you accept ARPA funds? Well, it would depend on how you use those. If you, in the lost revenue calculation, they specifically state there you cannot use the funds if you're going to be low on your millage. But if you use the funds for an infrastructure project, then you would be allowed. So it would depend on which category of uses, those ARPA funds are used for. There was a question about can you use funds for building a jail due to inadequate space? I'd have to think about that. There's nothing in the infrastructure side about it. The lost revenue side, I'd have to go and look that up to see if they're for capital purposes, if you could use it. Most of the items that I've seen on lost revenue have been more related to your typical operating expenditures, your recurring operating type expenses.
Right. The thing I think there is the closest I think we come is the pay-as-you-go maintenance.
Yeah.
So I don't think that sounds the same as what that is. So that'd be an iffy one, I think.
Yeah. For water and sewer projects, the question was water and sewer and stormwater projects. What if they were identified after the allocations were announced versus within existing CIP budget or other? The project could have already been identified. It's really whether you've incurred the cost. So if the engineering costs or construction costs are after that March 4th, 2021, is that the right date?
March 3rd.
So that's the key. So if the expenditures occurred after that, then they're valid under ARPA. And then as long as the project's obligated, and basically that means like budgeted, if you think about it from your standpoint, by that December 31, 2024 date, you have 2 more years up to 2026 then to actually complete the project and incur those expenses. Another question was on whether consultant and project managers would be eligible under expense for ARPA. If it's related back to the project, they would be. So just like any other project you might have, if it's related back to a cost that's allowable, say under the drinking water or clean water, then it would be. So Janice, do we have any other questions?
Yeah, James, we have one more. It looks like somebody else is asking, would the portion of a water sewer facility that also housed public works be eligible for water sewer infrastructure?
I'm probably going to lean on right now saying no, because I don't know that's going to fall. How does that fall under the drinking water or clean water guidance? I don't know if it's going to fall under any of those categories, because public works is typically going to be, housing the equipment and that type of stuff, used for street maintenance and those type of things. But as we said earlier, this is the interim final rule, and we all know what happened in the CARES Act. So my guess would be probably, definitely once they get everyone's comments by the end of this week, they'll come out with another round of, either changes to the interim final rule or more frequently asked questions. And they do update those questions, and they put the date after them if they've been updated or a new question comes up. So my guess is there's going to be additional guidance. And when this thing gets closer to an election, you're going to see that they're going to want to open up the range a little bit more if the monies aren't being spent. Because the whole goal is for the monies to be spent out there, for the local governments.
Okay, we do have a couple more that have come in. What should we do if we think we might have used ARPA funds on something not allowed?
Well, there's 2 ways you can think about it. One is think about how you're going to get the money. So the money is just going to be deposited in your cash account, right? So part of this is going to be you're going to have to recognize that revenue. So hopefully you figure it out before your audit takes place. That would be your best scenario, because most likely it would be a significant amount. If it comes in, your auditor looks at it and says, no, that's not an allowable expense, then of course you're going to have a significant adjustment, probably a material weakness potentially on the size of it. So that's not something you really want. So I would suggest contacting your auditor if you think you're going into a gray area, and kind of work together, build your documentation of why you think it's an allowable expenditure. And then you can sit down, with your friendly auditor, whether that's Ben or James or, one of our other folks, and say, hey, this is why I'm thinking it is, this is why it's not. We can also then submit some questions, to some other, resources that are out there to maybe get some additional guidance.
Okay, is there a website or other source that can help us calculate our revenue loss?
Yes, I talked about that a little bit earlier. It's GFOA has a calculator that's out there. That's available if you're a GFOA member. So if you're an active member, then they do have a program. I haven't seen it because I mentioned before I'm an associate member, so I don't have access to that portion of the website, but they do have one that's out there.
Okay, I got a couple more here. I think we got time for them. What should we talk to our auditors about regarding ARPA funds before our audits this year so we can prepare?
Ben, you want to take this one?
Yeah, I mean, I think from an audit standpoint, you're definitely going to want to involve them if there's anything kind of like we said before, there's a gray area before the audit or while you're using the expenditures that you're unsure about. I would always involve your auditor at that point and make sure that they're comfortable with how you're using the funds and that you're not getting into something where you're going to have an unallowable expenditure or cost or something of that nature that could result in findings or other things that are not desirable. Kind of another thing too is just to maybe talk to your auditor about what kind of documentation they want you to keep as far as backup for all of this. I mean, how are you going to track the funds you're using? What are you going to do? All these types of things. Basically, you're probably going to want to make it as easy as possible for someone who's not yourself, i.e. the auditor, to know what you did with these funds, how you used them, and where was the backup for them. So I think if you can meet those kind of general kind of principles, then you're going to have an easier time when it comes to just providing all the information for the audit.
Yeah, I know. Some of my governments like to create a separate fund for these one-time funds. I know, a lot of my larger counties and stuff, they may have, already have over 100 different separate grant funds. So there's kind of a mix on kind of whether people will create a separate fund just to account for these. To me, if you're using it, say, in a water and sewer type operation, then that fund's typically, there's usually most people have a capital project fund set up already under their water and sewer. They usually have, 3 to 6 funds anyway that roll up to what you see on the financial statement. So a lot of them are just going to put it into that fund to be utilized. It's always, just keeping track of exactly how the money's spent, just like any grant, so that if it's ever, of course, it's probably going to be subject to federal single audit. So your auditor is going to look at it. And at any time, if the federal agencies, want to look at those funds as well.
I'd say another thing while on the same topic is if you are using it for the revenue loss, that it might be a good idea to go ahead and have those initial conversations with your auditor on the front end as far as how you're doing the calculation and other things. Because I think that'd be a bad case if you calculated it one way and it maybe wasn't quite the same way they calculated or something of that nature. So I'd say maybe have a conversation early on if you're planning on doing that, just so everybody's on the same page.
Well, Ben, I have one last parting joke for you as a newer dad. Are you ready?
I'm ready, James. Hit me.
Okay, so this is 4th of July themed as well. So I'm kind of staying in a genre for you.
Okay.
So what is the name of the rock group that has 4 members yet none of them sing?
I have no idea.
Mount Rushmore.
Oh, just so you all know, we also have another joke submitted for your listening pleasure from one of our viewers.
That's great.
Yes, someone's vying for your crown, James. Svetlana Reese, I apologize if I've butchered your last name, R-I-E-S. Why did the accountant stare into his bottle of apple juice for 2 hours?
James, you want to answer that one?
I don't know this one. I'm learning.
Ben?
I don't know either. I'm at a loss.
Ooh, she stumped you. Because the label said concentrate.
Good one.
So there you go. All right, well, that actually wraps up our questions. So we're good to go. Thank you, James and Ben, for your time today. It also means it's a wrap for the 2021 Government Summer CPE series. Now, you'll see you can still catch all of this year's webinars on our website. So if you've missed any installments or just want to brush up on what you learned, maybe you missed an answer to a question from today's or whenever, they're at the link on your screen. We'll have this one up in the coming days. So go ahead and recap at any time. It's all there for you on the website. And once again, also don't forget about our new premium webinar series on Excel. These links will be in the PDF you have either downloaded or will receive in your email tomorrow. If you have questions regarding the American Rescue Plan Act, please don't hesitate to reach out to James or Ben. Their contact info is on the screen and they'll be happy to assist you. And finally, don't forget, fill out your evaluation form as part of your CPE requirement. You'll see this link right there. And that would be it. It's been our pleasure to bring today's information and all of this year's webinars to you. We hope you found them to be helpful, informative, and maybe even a little fun. So have a great rest of the day and please stay safe and healthy. Take care.